Good afternoon and happy Thursday, everyone. It is Scott Rollers with River Place Capital, and it's Thursday, June the 2nd. I'm just going to take a moment of your time just to discuss what we saw in markets last week, what we see in markets moving forward, and the huge divergence we've seen this year between growth stocks and value stocks. I'm going to talk about that and what we see kind of moving forward. And last week finally was a great week in the equity markets. We finally needed some good, encouraging news. And after 7 straight weeks of selling in the equity markets, we did have a winning week last week with the S&P 500 up 5.3%. So quite a rally last week. We went from almost from an intraday bear market on May the 19th to up 5.5% last week. Now, the mid cap index outperformed the S&P 500 by being up 5.5%, and the S&P 600, which is the measure of the small cap index, was up 5.5% as well. So again, small and mid modestly better than large, but all in all, a very encouraging week in the equity markets as markets continue to march higher. Now, one of the things that I wanted to talk about is that we have seen such a divergence this year, and so the S&P, as we said at the end of last Friday, is down around 12.8% year to date. But if you look at the S&P 500 and peel it back between growth and value stocks, your growth stocks are actually down 21% year to date, and your value stocks are only down 4% year to date. So incredible 17% divergence here in the large cap indices. It's 10% in the mid cap indices, but 17% divergence here. So what that tells us is a couple of things as we start to recover and move forward from these lows that we hope that we have put in on the 19th of May. As we continue to recover or start a trading range towards recovery, what you should see and what would be encouraging and healthy to see is that you see the NASDAQ or the growth stocks really lead this rally higher. Not that the Dow and the S&P aren't going to move higher as well and play some catch up, but what you should see is some reversion, what we call reversion to the mean, where you're closing the gap on that huge divergence between the two sectors. So you should start to see as we recover the NASDAQ outperforming the Dow and the S&P 500. However, we believe that there's going to be a cap on how far up the NASDAQ is going to recover or the growth stocks are going to recover because we are in a rising interest rate, high inflationary environment, which is impacting the margins on these high growth companies. And when you're paying multiples and high premiums, you don't want to see margin compression. You want to see either margin expansion or maintaining those margins. And that's why there's going to be a cap on your growth stocks and why we still believe value is still going to be the leadership moving forward throughout the rest of this year. So we really believe that we have put in a temporary bottom, at least. That's not saying that there's not a negative catalyst that could come down and knock the market down another leg. But what we are seeing is we believe that we are setting up for a trading range this summer in which we can have some recovery back. And whenever sentiment gets so negative and all of the analysts become so pessimistic, that is not always an indicator, but can be a decent indicator that the tide is about to change. And the technical analysis that we get is telling us that the technicals are starting to look really, really good in the market, that there's a lot more buying pressure than there is selling pressure in the market, which is a very, very encouraging sign. The other thing is remember to always stay invested in reevaluating your portfolio. As I talked a couple weeks ago about the steps to take during a bear market, the reason to stay invested is specifically for weeks like last week where you can capture over a 5% recovery. And if you aren't in the market, you miss out on those recovery weeks, recovery days. So as always, if you have questions about how this all impacts your individual portfolio or questions for us, give us a call. We're easy to talk to. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your day. Thanks so much.